Hi there, this is a teaching coming to you from the Training Place of Excellence, and it's a teaching on the petty cash account. When we say the petty cash account, please do bear in mind it is one of your day books. It also has the double purpose of also being a general ledger account. That is to say, you will find that if you debit the petty cash account, you may have, or you will actually have, a corresponding credit entry in another account. The double entry. For every debit entry, there is a corresponding credit entry. And as it is a general ledger account, you will find when you have posted all your transactions, you then need to close the account. It says to you there, in closing account, the total debit column has to be the same as the total of the credit column. So the total debit column needs to be exactly the same as the total credit column. And we'll be closing the petty cash account, which is technically a T account as well. So I've given it a couple of different names. You're talking about the petty cash account. It is a T account. It is a general ledger account. It is also a day book as well. That is to say, the day book where you record your petty cash transactions. And technically, when we say petty cash account, it's literally a float of funds or money, cash, that the business may just hold in the premises. So it's usually a small amount. It can be an interest system or it can be a non-interest system. Let's look at a question. It says to us, during the month, the following expenses were incurred. So you have a couple of transactions that have taken place that you need to enter into the petty cash book that has been given to us below. It says, enter the following information above into the petty cash book and close off the petty cash account at the end of the month. So we have the first item, which is for tea, coffee, and milk. You will find that these are expenses. Expenses will be a credit in the petty cash account. That is to say, you're paying money. You then have to, of course, ask yourself, what are you paying money for? What are you spending money on? Tea, coffee, and milk. I drop that into my details, and the date is the 3rd of June. So I've got the 3rd of June there. The voucher number, I can drop that in. And how much did you spend? I have spent £24.48. I put that under the total amount column. Then you would notice you have the analysis column. That is to say, okay, you have just spent £24.48 buying tea and coffee. What analysis columns would you place that your expense into? Would you put it under the VAT, postage, travel, or sundry? Because it's tea and coffee, I will put it on the sundry. Then, of course, notice it says to us that includes £2.80 VAT. So I will put the exact VAT amount that I have been charged under the VAT column. Then I will put the net amount under the analysis column of sundry, which is a ledger account. Anyway, then of course I can move to the next item, and that is on the 13th of June. You had a train fare. You paid £44.90. So I've put in the voucher number and I've put in the total amount, £44.90. Then, of course, I have to ask myself, train fare, which of this ledger account will I classify it under? And, of course, that will go under travel. And we want to do the same thing for the other two items. Just remembering, put in the date you spent your money. You put in what did you spend money on. And then you identify your voucher number. How much did you spend? £34.80 on train fares or postage. It's on postage this time around. So you spent £34.80 on postage, which is the third item that we are posting. And that would literally be taken to what analysis column. I ask myself, what did I pay for? What will I classify it as? And that will be postage. And of course, we can move on to the next item, which was on the 25th of June. You have bought Mark Linus and the voucher number is 004. So if you have 10 items, 20 items, 5 items, 1 item, you just list all the items and how much did you spend. Notice in this case for this item is £36.54 includes VAT at 20%. So that means that £36.54 represents my gross amount. So you would need to split that gross amount into net and VAT. You will need to divide your £36.54 by 6, or you divide it by 1.2. So I'm dividing by 6, and that will give me my VAT amount. You can divide by 6, or you can divide by 1.2, then multiply it by 0.2. That would give us exactly the same thing. Why? Because £36.54 represents your gross amount, which is 120%. 20% is VAT, 100% is net amount. So I can divide by 1.2 and multiply by 0.2, and that will give me the VAT amount of £6.09. I can then do the difference, and that will then give me the net amount. So my net amount could also be £36.54 divided by 1.2 times 1, or you can simply do £36.54 minus your £6.09, and that will give you your net amount. Please notice we did not just do 20% of £36.54. That will be wrong. You are then making that the net amount, but that is your gross amount. So £36.54 is my gross amount. It will be wrong for you to do 20% of that amount. So wrong. It will be wrong for you to do 20% of £36.54. That will mean you're making that amount your net amount, which will be wrong. Okay, so you find your figures, and I can drop in my net, and because it's Mark Linus, I'm going to put it under the sundry column, and that is the last item I've been given, so I can close. I will close at the end of the month, and I am closing as balance CD, which is your closing balance, and then I need to get the difference between the £200, which is my total, which I will plug in there, and the credit side, which literally tells me the total has to be £200 at that bottom as well. Sorry, not there. The credit side has to add up to £200 as well. And if I currently, as it is, add those 4 items together, it is less than £200 by £59.28. So when I put in the difference, now all of those figures, 5 transactions or 5 items, will add up to exactly £200. If I have a closing balance, I will have an opening balance in the next accounting period, and that will be balance BD. You're going to open with the amount that you closed with, which is your £59.28. And the only other thing that is remaining is for us to get the totals and bring the totals for each of the columns downwards. And after that, you are done and dusted. So that is your petty cash account. Please remember, your petty cash account is a T account. We want to close the total amount column against the total amount column on the other side. So the debit total amount column, what is that total? Write it down. Credit side, the total amount column, what is that total? Write it down, then get the difference, and that is me closing my account. Because it is a petty cash, the assumption is that there's always money in the petty cash. So really and truly, there should always be some little money remaining. So you should have spent less than the physical amount that you have in your petty cash. And you would usually have an opening balance on the debit side where that happens. I hope this has been useful. Please hit the subscribe button if this has been useful, and follow us on all the social media platforms. Again, please hit the subscribe button and follow us on all the social media platforms. Adios, keep studying and working hard. See you later.